joins us now. Seth, tell us a little bit more about how you sort of put this thesis together around these names.
Yeah, so what we're looking for is we're looking for companies that we think have been undervalued by the market and that we see profit growth returning in 2025 and beyond. And the companies that we see have a competitive, durable competitive advantage, what we call our economic moat. And so that's how we formulate our top picks.
Okay, let's get right into it. Starting with Nutrien. What do you like there?
Well, Nutrien is the lowest cost potash producer in the world. This is a company that saw potash prices fall from all-time highs above $1,000 a metric ton in 2022 when the Russia-Ukraine war first started. Then potash prices overcorrected, and we saw the Russian-Belarus potash supply return quicker than the market was expected. And then the potash market went from undersupplied to oversupplied, sending prices down over 70%. But we think prices are poised to recover as we've seen returning farmer demand. In 2024, potash demand hit an all-time high, and we expect demand growth further in 2025, even if we do see U.S. tariffs on Canadian potash imports. And so we think with growing potash demand and production cuts in Belarus and Russia from those two major producers, Uralkali and Belaruskali, Nutrien is well positioned to benefit from increasing volumes, higher potash prices, and higher profits. So we expect Nutrien to generate profit growth in 2025, and that should be a strong catalyst for shares.
Okay, another name on your list, Corteva. How come?
So Corteva, sticking with ag, Corteva is one of the premium seeds and crop protection producers in the world, with about 50% of sales going to North America. Corteva should be very insulated from tariffs because they produce most of what they sell in local markets. So the entire seed business is very local. Most of their key crop protection franchises, think of the Enlist crop protection that complements their seeds. Think of the spinosins, insecticides. Those are all produced in the U.S., so that should be very insulated from tariffs. They said only about 2% of their cost of goods sold comes from China in their crop protection business, so very minimal impact from tariffs. And ultimately, if farmers are going to grow crops, they're going to plant seeds, they're going to need crop protection products, and they will pay up for the products to give them the best chance at the highest yields. So that should benefit a company like Corteva that can offer those premium market-leading products, and we see profit growth in 2025.
Okay, and finally, Albemarle is on your list. Seth, why?
Well, lithium prices, similar to potash, have fallen since reaching an all-time high at about $80,000 a ton in the China spot market. Prices are now a little below $10,000 a ton, but a lot of higher cost producers in the lithium space are unprofitable at these current prices. Yet we see demand continue to grow. Global electric vehicle sales continue to grow at a double-digit pace every year, led by China as they're transitioning their sales to EVs. We expect U.S. and European EV sales will see growth in 2025 versus being flat in 2024. And there's these big energy storage systems, batteries that are being built, and that's the fastest growing demand source for lithium. So we think lithium demand is going to grow at a double-digit pace for the next several years. Meanwhile, due to low prices, supply is shutting down, and we're seeing supply growth slow. So we think the lithium market will go back into balance, and lithium prices will rise. And for Albemarle, who has two of the lowest cost lithium resources in the world, we think this will lead to profit growth in the coming years, whereas the market is assuming lower prices for longer. We're bullish on the space, bullish on lithium prices, and Albemarle's our top pick.
All right, so Nutrien, Corteva, and Albemarle, three stocks that you are watching. Seth, thank you very much for making sense of the basic materials market for us.